not this particular move, but the last one, um, because it happened off hours in the U.S. Everybody in the TradFi company was paying attention to crypto markets, specifically Bitcoin, because they wanted some sign of what the hell was going on with markets, and so they were absolutely using Bitcoin as a barometer for what was likely to happen once their slow ass markets opened up to after the weekend or whatever. So yeah, definitely a use case. And when you have big players, I think they were in traditional companies like BlackRock and all this kind of crap. When they're looking to Bitcoin for gauging market sentiment, that's a good sign. It's a very good sign.
I'm a little butthurt, to be honest. Just mainly because gold always seems to get its little boost, global, pandemics, world war, Middle East, it gets a little boost, and then everything else is just like a wet fart.
Welcome back to Token Narratives with Bitcoin.com, where we discuss the biggest stories shaping the Bitcoin and cryptoverse. My name is Graham, and I'm repping the marketing function at Bitcoin.com. We also have Bitcoin.com CEO Corbin Fraser and media product manager Mr. David Sensel. Right? Let's get into it, gentlemen. This week, Bitcoin did that thing where it dumps when there's a geopolitical uncertainty. So I'm talking about the tensions in the Middle East, where Iran launched a bunch of missiles, rockets at Israel. Bitcoin made a 4.5% move to the downside pretty much immediately after the rockets started flying, while gold moved in the opposite direction by about 1%. What I find interesting about this personally is that traders seem to be converging on Bitcoin as the asset you dump when TradFi markets are closed and some geopolitical chaos unfolds. So like we've seen this in the past, including during the last big outbreak in the Middle East in April, when Bitcoin also drew down hard. And during that event as well, the US markets happened to be closed at the time the rockets flew. Of course, it works both ways, meaning that while Bitcoin dumps first during these types of events, it also tends to be the first to recover. And at both ends, it seems to be making bigger moves than the broader markets. So I think there's a case to be made that this is an emerging use case for Bitcoin itself. Like, in other words, you hold it because you have the ability to dump it when something like this happens. You can be the first to react. And once the dust has settled, you can be the first to outperform the market on the recovery. So there's a case to be made that this actually contributes to Bitcoin's value proposition. You guys have any thoughts on this?
To build on this, yeah, I agree 100%, Graham. I listened to a podcast with some, what's it called, traditional finance people, and they were saying that not this particular move, but the last one, because it happened off hours in the U.S., everybody in the TradFi company was paying attention to crypto markets, specifically Bitcoin, because they wanted some sign of what the hell was going on with markets. And so they were absolutely using Bitcoin as a barometer for what was likely to happen once their slow ass markets opened up to after the weekend or whatever. So yeah, definitely a use case. And when you have big players, I think they were in traditional companies like BlackRock and all this kind of crap. When they're looking to Bitcoin for gauging market sentiment, that's a good sign. It's a very good sign.
I'm a little butthurt, to be honest. Just mainly because gold always seems to get its little boost, global, pandemics, world war, Middle East, it gets a little boost, and then everything else is just like a wet fart. It sucks. It really sucks. I just keep hoping that like one of these days we're actually going to talk about this. Is like, see, like this is the bellwether now. We're the hedge against chaos. But maybe that meme hasn't set in enough, and all the TradFi boomers are just like, guess I'm going back to gold. Lots of war these days, and maybe that's it, or I don't know, man.
It's also, I think, kind of mimetic or self-reinforcing, right? Everybody knows that when chaos enters the world, you go to gold, and Bitcoin hasn't done that yet, and so it's almost like it's a self-fulfilling prophecy. So it won't yet, right? Because some world events happen, and then because Bitcoin hasn't been that hedge yet, people are going to want to get out of it. I'm like, oh shit, everyone else is going to dump it, so I'm going to dump it. But yeah, maybe we can eventually get there. The other interesting thing is I remember listening to some TradFi people speak about in 2020, the big drawdown, right? The COVID shock that hit the world. Both Bitcoin and gold went down massively. And what these TradFi people said was when you have a shock like that where people are getting liquidated or getting margin called, you always liquidate your most, what's it called, your best performing asset first. It's kind of counterintuitive because you need to pay for the margin calls and other difficulties with your best assets. So gold and Bitcoin are highly liquid, and they didn't go down as much. So they actually went down a lot because people were like, "Oh shit, I gotta pay for other things."
All right. Well, I think this ties in nicely to something I'd like to share today, which is this report. Bitcoin, a global liquidity barometer. And I think the reason it ties in nicely to it is, as you'll see in my explanation here. Okay, so let me explain this. First of all, this is a report from Lyn Alden Investment Strategy. Lyn Alden, by the way, for those who don't know, is a macro investor, commentator in the space, and a Bitcoin bull, I guess you could call her. Recently, she's been one of the phrases that she has been known for recently is "you can't stop this train," which refers to basically the idea that central banks going to print, and they have to print because we're sort of in this like debt spiral that can't be stopped, and they're just going to keep printing. You can't stop this train. That's the idea, right? So that's her main thesis that she's been talking about for a long time. But here, this is sort of an interesting research report, which is saying effectively that Bitcoin is the purest asset, the purest major asset for tracking global liquidity. So when global liquidity is on the rise, Bitcoin is also on the rise, and vice versa, the same. And they actually did some research here. I prepared some charts as well, some slides for you guys. So 83.2% of the time is the correlation, right, between Bitcoin and global liquidity changes, right? Other assets are also highly correlated, for example, stocks. But Bitcoin is more pure in its correlation, probably because it doesn't have pesky things like earnings and other market sentiment. By the way, feel free to interrupt me at any point during my spiel here.
Yeah, I would just say also for the liquidity thing, it's also easier for pretty much everyone in the world to get access to it. There's no like regulatory hurdles and stuff, so people can get in and out of it really quickly. I think that probably also helps.
Yeah. So if Bitcoin is the most correlated with global liquidity, like what does that mean? How can we as investors act upon that information? Now, obviously, you could buy Bitcoin when you see global liquidity rising, but like what is global liquidity? I mean, one way to measure it is the global M2 money supply. So that's it's a broad measure of money supply that includes physical currency, checking accounts, saving deposits, money market securities, and other forms of easily accessible cash. So, from the perspective of someone on the ground, when you see global liquidity rising, obviously it's correlated here. When you see print banks starting to print, when you see things like what happened in China last week with stimulus happening, you can bet that Bitcoin is going to move in that direction as well. Okay, so however, it's not a perfect correlation, and this is where it ties into what we were just talking about. It's like 83% of the time it is correlated, but there's 17% of the time when it's not. And what are when is it not, right? And it's not when you have things like these black swan events, right? As we've been discussing. So this chart is showing when it's not correlated. So the first major not correlation or breakdown of the correlation was the Mt. Gox collapse, ICO bubble pop, plus token Ponzi, COVID-19 sell-off, crypto credit contagion, which sort of popped the last crypto bubble, I guess. So those are the times when it doesn't correlate. So these are harder to act on, I guess, as an investor. But if you're quick, you can, as we've discussed, right? You can make money there, right? That's the idea with that.
Can I jump in real quick?
Yeah, please do.
I think I've mentioned this before on this podcast, but I think the original person who kind of made everyone aware of this is Michael Howell, who really focused on the global liquidity cycle, and he has a slightly different definition, right? So M2, as you said, is it doesn't capture everything of what global liquidity is, and his definition is a bit more, I guess, more encompassing. It's like you take all the money that's moving around financial markets and asset markets. So it's not just M2 is basically the amount of money that banks hold, right? And that doesn't account for the funds that are actually moving around. So it's quite a bit larger than that, and so he tracks it that way. And his global liquidity cycle, I think, correlates a little better than this M2 thing with the movements. But it's also, just to say, by his estimation, it's also in an uptrend right now. So
right,
good for.
Okay, so we're clearly in an uptrend, and you got to watch out for these, let's call it idiosyncratic events. That's what it's referred to in the article as well. These are the times when the correlation breaks down. Now, the other major times when the correlation breaks down is when Bitcoin is extremely undervalued or overvalued. Okay, so here, I don't know if you guys have heard about this thing. It's the MVRVZ score chart, which seems to be a really good indicator of when Bitcoin is undervalued or overvalued. Okay, so let me see if I can try to explain this. You have the black line is the market cap. Okay, now the blue line is what's called realized market value. So it's essentially the cost basis of long-term holders. And so if a lot of people bought Bitcoin at a significantly lower level than it is now, their cost basis is lower, right? And when that happens, the way the Z score is calculated as higher. When long-term holders' cost basis is lower, the Z score is higher.
So let me just get that straight. So that basically means they would have more incentive to sell
Exactly.
because there's
They've been
there's more
sitting on gains
potential.
for a long time.
Yeah. So
Yes.
there's more potential sell pressure.
Yes, exactly. Okay, so then just looking at this chart, right? It seems to be a really good indicator, right? So if we go back to 2017, the Z score was like off the charts at 10, and that coincided perfectly with the top in 2017, 2018, late 2017, right? Same happened in 2021, and to a lesser extent with that second top in late 2021, early 2022. And now we are at a Z score below 2. So it's not banana zone territory. If you were smart, you were like scooping it up over the last year, but it's probably not too late to get into the game here. And as global liquidity rises, and the price of Bitcoin becomes higher, you can expect this Z score to get up, and probably a good indicator when it's gets close to this red zone. It's time to start rotating back to that dirty fiat.
Or
On
you
this
get into
point,
that weird gold stuff.
Or some of that gold stuff.
weird gold stuff. On this point, I wrote about this a little bit. Just going to shill the weekly newsletter. Do a weekly newsletter. I wrote about this
Please.
kind of liquidity thing. China.
Yeah,
China.
China.
They opened up the bazookas last week for their biggest like liquidity push in 4 years, maybe more. And so you're starting to see like very kind of overt signs of liquidity coming back into the system, like via government action, fiscal stimulus. And many people were asking, just as a side, why is China doing this now? Why haven't they done it before? Blah 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 blah. But the answer was pointed out by a guy on Twitter, a Japanese guy, Nakamura, who does a great podcast called Across the Spread, who pointed this out, which is China had to wait until the Fed started a cutting cycle, right? They couldn't afford to do it. And now that the Fed has started a cutting cycle, basically 1 week later, they opened up the floodgates. And this is probably a sign of things to come. Once America can start a cutting cycle, it allows all the other governments to finally open up the floodgates and really start printing their money. So this could be kind of a very overt beginning of lots of money printing from other countries who are finally able to do it.
Yeah,
Yeah,
and I think
I've had.
go ahead, Garvin.
I was just gonna say I've had like a barrage of questions being asked from friends and colleagues, and you know, everyone wants to know: are we it? Did we miss the top? And this is just like that was it, and we're now just we're cooked. And I've kind of just been like pretty chill about it. I think we got a long ways to go. I think there's a lot of potential room still here. We've got China's money printer on, U.S. elections. It was kind of bound to be a dip before anything major. And I came across a couple interesting charts. The one I've been looking at, and I actually built a little Telegram bot just to give me some reminders because I don't look at charts that often, and I'm kind of like a shitty trader. I'm not a day trader. I just buy and I hold, and then eventually I offload a little bit when the markets are ripping, and then try to buy back in a little bit later. But I'm like a lazy trader. I just, I accumulate, I stack, and then I just decide what to do later. And yeah, I've been dabbling with this. It's called the Pi Cycle Top Indicator. Do you guys know about this one?
No.
I've heard of it. I don't remember what it does though.
I'll share my screen. So for you guys watching on YouTube, you can see the chart. So this is a chart that goes from 2012 all the way to today. And there is vertical red lines to indicate when top cycles were previous. And the general idea, though, is that it uses the 111-day moving average as well as the 350-day moving average. And when those two lines converge, typically you reach Pico top. So if we go and zoom into, let's say, 2017, 2018 cycle, you can see that when they touched, basically it was downhill from there. If we reset this, go back to the 2022, 2021, similar. When they touch, kind of all downhill from there. And then, you kind of zoom into the last, say, 3 months. We're not there. So, I just kind of was hacking together my own version of this in a Telegram bot to warn me when and if those lines start getting close to converging. Maybe I should actually look at the charts, because I'm not a chart looker. I'm just like, but if a bot tells me to go look at a chart, I might be like, all right, I guess I better look and see what's going on. But in theory, if you were to have traded this chart the last 3 cycles, at least, it would have been a successful top trade. So, there's lots of these indicators that you can potentially use. I don't know how accurate they are. I think this one, only gets accurate within a few weeks or days. Like this one, clearly it didn't. I mean, it touched here, but it touched here. I don't know. Maybe a degenerate trader boy could explain to me that. But it's an interesting chart nonetheless. It's called the Pi Cycle Top Indicator. And when lines touch, things have reached maximum hype. And but I think beyond just kind of looking at charts, you can sometimes feel it. You can feel the top. This doesn't feel like a top. Like a top tends to be like mania. There's you can feel it in the air. There's greed.
It feels more like fear.
Yeah.
There's no mainstream craziness too, right? You're not seeing it on CNN and stuff, really, like the last couple cycles.
Yeah.
All
Need
right,
some
good stuff.
really B-list celebrities coming out endorsing some cryptos, and then you can be like, okay, there's signs,
I think this cycle we might get some A-listers, because we've had B-listers and lesser celebrities in the previous cycles, but I think maybe you could get some big people coming in.
Well, whichever ones don't get arrested when Diddy starts naming everything in a weird freak off,
Win Diddy coin. I'm sure there already is 100 of them.
Dude, Diddy's a diddler.
All right, moving on. That's good stuff. Shout out to Bitcoin Magazine Pro. Both of those, the indicator there, it seemed that it was from their site. So, David, get on the case, man, for Bitcoin.com's charts.
We need to make some bangers.
All right. What do you guys want to talk about next? I thought. Go ahead, David.
Well, I thought since we're kind of talking about Bitcoin, I was thinking Corbin had a really nice, good tweet, I think, this week. And I was hoping that he might talk a little more about it.
Yeah, I'll bring it up.
Yeah.
What did I say? I don't recall.
You said this is about Bitcoin's security model. It's something that's kind of near and dear to my heart, because I feel like the security model problem hasn't really been fully addressed yet for Bitcoin, or even partially addressed. And so you were talking about the op return thing.
Yeah, every Bitcoin maximalist is unfortunately very. They just sweep this problem under the rug. Nobody wants to talk about it. Yeah, so I guess I tweeted Bitcoin security model may depend on op return. So there's this blog from I guess it was maybe in the last year, from Jason Chavana's. He's the guy that created memo.cash, which was one of the early on-chain social media platforms. It's still around. It's on Bitcoin Cash. This is pre-Warpcast. This is pre-Nostr. This is these guys did it before everyone else. And it worked, and it worked by using op return. But So he's clearly more on the big block camp. But in this article, he talks a lot about how just, with each halving, that we get closer to the end of the block subsidy. So the block subsidy is ultimately what secures Bitcoin. Without a subsidy, miners leave. Why would a miner continue to mine Bitcoin and put their very expensive machines, run very expensive electrical costs, run maintenance, run all the, renting land, whatever they've got to do to kind of cool
very
everything.
capital intensive.
Yeah. So what happens when the Bitcoins run out? And this is currently, I think the last I checked, it was like 2100, I don't know, 2140, 2150, something like that. So like we've got time, and I think that's kind of that's sort of like the default. Like we don't have a solution yet, but we'll come up with one in the next 100 years or so, which maybe we will. I mean, who knows? But I guess the idea though is that without the block subsidy, you will have max exodus of hash rate, and a 51% attack becomes much more possible on a proof of work chain that has very few miners securing the network. So, different ways to protect the blockchain from this potential issue is, you need a number of transactions to go up, where there's so many transactions in each block. Right now, Bitcoin doesn't have this issue so much, but like many proof of work blockchains, they'll often have like empty blocks. But the idea is that if you get mass adoption, your blocks are always full. You've got a ton of transactions. The more transactions there are, the more fees there are for miners to compete over. And potentially, if the fees are there's so many fees and there's so many transactions, then there's still an incentive to protect the network by just the fact that millions and billions of people are using this chain every day, for their day-to-day needs.
So, of course, just one interruption, Corbin. Yeah. One wrinkle in this is the base fee would have to increase quite a lot, and basically, I think it would price out normal people from transacting on the Bitcoin layer 1, right?
Yeah, I mean, this was one of the debates as well during the scaling wars. Was like, if the block size stays low, then the only people that are going to be able to afford putting transactions on layer 1 are institutions, large scale businesses that can afford to write to the chain, because the fees will have to rise so much, and there'll have to be so much competition for that small space, that hopefully that's enough to create enough of a security model for maintaining enough hash rate that it can't be attacked by, some government who's just like, hey, let's spin up a data center and just murder this whole Bitcoin thing. Yeah, and then of course, you can go down the path of like the size of each transaction, in terms of bytes. The bigger the transaction, the more the fee. The more fee goes to the miners, the more incentive there is to continue mining without a block subsidy, i.e., unlocking more Bitcoins as you mine Bitcoin. And then, like the fees per byte of each transaction. So Jason lays it out pretty clearly here that like Bitcoin and Bitcoin Cash and different proof of work blockchains have prioritized different pieces of the puzzle. They have, I'm not sure why you're getting bad gateway there, but they prioritize different things. Bitcoin has prioritized, expensive transactions. That's their current solution to the security model, is make the the block space finite, and make sure that there's enough high fees coming in through there, where there's an extreme fee market, and that's potentially one way to solve it. Will people just move on to a lower fee chain? Maybe. Will Bitcoin ever upgrade its 1 megabyte block size, or will it just keep kind of doing this like crypto sneakiness to get their like block weight increased? Maybe. But and then you've got Bitcoin Cash. They're saying, hey, just put whatever you want, in the op return. At least then in theory it can be pruned, but the actual transaction sizes can increase, and miners will have greater incentive to continue mining, and potentially you'll have with a greater block size, more potential transactions per block going in. So it's an interesting kind of like game theory problem that does need to be solved. Like I said, there is time to figure this out. Last Bitcoin doesn't, dry up until 2140, but this problem could arise earlier, right? If the price of Bitcoin doesn't rise, like if all of these like stock to flow models are wrong, and Michael Saylor's wrong, that Bitcoin doesn't go to whatever he's saying, 13 million per Bitcoin or something like that. If the price of Bitcoin doesn't go up enough, and the the Bitcoin reward, the subsidy that you get when you mine a block, and you're the lucky pool or the lucky solo miner that won it. If that doesn't go up in tandem, then yeah, potentially that security problem creeps up much sooner than the actual miner subsidies being basically turned off in 2100. So this problem could happen in like the next 50 years, the next 20 years, maybe. It just kind of depends on how the market prices Bitcoin. So yeah, fun problems.
Yeah. So two things. First, I believe that the theoretical maximum for a block size has been increased to about 4 megs, although that it usually doesn't hit that. It's about 1, I think, as Corbin was saying. And then the second is, Corbin, what do you think is the solution? Do you have any ideas? What do you think is what's the way out on this?
I'm still somewhat more on the big blocker side than anything. I still feel like that is the most rational thing. I think an adjustable block size is probably the only thing that is going to say provide some alternative safety mechanisms there to this problem. But I don't think Bitcoin will ever go through with a hard fork that would be required in order to increase that. And I don't think they would ever take the high risk chance of like an adjustable block size potentially being gamed. Like Bitcoin Cash, they've got their adjustable block size. It's been out for a while. They haven't been attacked. There's a lot of people that hate BCH. So in theory, it should have been killed by now, right? Like some noble miner, angry miner, if they really wanted to make a point that this is the worst solution for Bitcoin, they could demonstrate that by just taking Bitcoin Cash out. And I would encourage them to try that. I think it would be an interesting experiment. But yeah, I think that at some point they're going to have to deal with that problem.
You heard it here first, folks. Bitcoin.com CEO Corbin Fraser daring the world to bring down Bitcoin Cash.
I just think it'd be a fun thing to watch. And I think if a degenerate miner were to live stream that, I would gladly encourage them to, hey, you can have our YouTube for the day. Let's see what happens. It'll be
what do you make of this kind of, especially it's been very popular this year with the kind of rise of Bitcoin L2s and all this kind of stuff, of a lot of Bitcoin people saying like, oh, the way out of this is kind of adopting an Ethereum model where a bunch of L2s become the place where normal people, the normal peasants maybe, transact Bitcoin. And then Bitcoin mainnet is where L2s settle. And so then it's okay to have transactions be, tens of thousands of dollars or wherever it is like that.
Yeah, I mean, I think that's potentially one model, and I think that's the model Ethereum is trying. However, I would say the L2 game has not been beneficial to Ethereum in any major ways. Price has not gone
exactly.
up. It's not like we haven't seen this EIP 1559 like hyper deflationary asset, which was kind of like
what did they say? Ultrasound money?
Yeah, where's my ultrasound money, boys? Let's go. So yeah, I mean, like there is that. I think it's great that Ethereum is trying this. Maybe it works, right? Maybe that's great. But if Bitcoin were to emulate that model, which, man, Bitcoiners, they don't want to emulate Ethereum, right? Like there's like a certain sect of Bitcoiner that will be like, hey, we should do more L2s. And I'm probably more aligned with them. I think we should try more things, experiment, see what works. Let's go try that. But I think there's going to be a core part of the Bitcoin community that's just like, that's not us, man. Let's let them try that, and let's let them see if that works. And we've got 50 to 140 years to kind of maybe figure this this problem out. So why rush? And in some ways, I do respect the fact that Bitcoin is trying to just be like safe and boring. Everything else can be degenerate. That's fine. Like, you kind of want one asset that's trying to be safe and boring. And maybe, Bitcoin, they kind of won that meme. So I'm fine with them moving slow. Yeah.
I think one little tidbit here that's related to this is, I don't know if you guys have heard this, but recently a lot of the big miners in the US have been kind of saved by this AI boom. So what they're doing is, where normally they would have gone bankrupt by now because the halving occurred, they're getting half as much Bitcoin. It's not like transactions have exploded, so they're earning half as much as they normally would, but they
And price hasn't gone up.
And price hasn't gone up, exactly. So normally they would have gone bankrupt and had to dump their Bitcoin, and we would have seen like a death spiral. I don't know, but that's probably exaggeration. But what's been able to happen apparently here is that a lot of these miners have been able to, because they have these contracts with, they already have data centers set up, and they have like contracts, long-term contracts with electricity providers, where they have a lot of megawatts at their disposal, and they've been able to sign contracts with like huge, extremely wealthy companies that are in the AI space to sort of rent out their capacity, and this has been able to shore up their reserves and prevent them from having to sell their Bitcoin and go bankrupt. So that's an interesting development, I think, that's happened here in the last few months.
Yeah, maybe an extension on that, as well as we do have more of these Bitcoin side chains. They're somewhat layer twos, they're layer two-ish, and they're doing various merge mining. So the idea is that a Bitcoin miner can mine both Bitcoin as well as unlock rootstock, RSK, or unlock fractals, which is the latest one that's doing the merge mining thing. So they try to be somewhat symbiotic to the proof of work chain, and this as well, provides miners with further subsidies to both maintain this side chain and protect it, and put aside some of their resources towards this other chain where it doesn't impact their ability to mine BTC, but it does give them this ability to like support a Bitcoin friendly side chain. I think adoption on rootstock has, at least for a while there, I think they were like over 50% of the mining hash power was like pulling in rootstock. I think fractals was, last I checked, somewhere around 30%. But yeah, it's interesting developments, because I think it's expensive to do mining. Like Bitcoin.com, we used to run the mining pool. It's expensive, man. It's very, very arduous process to kind of get everything organized and manage it all. It's I commend all of those Bitcoin miners who just focus on that, and they live in a totally different world of Bitcoin than most of us. Like a lot of them do not give a shit about the price. They're just like mercenary nerds, just providing metal and power and electricity, and they're just there to try to make as much money as they can. Some of them will mine and save and try to time the market, but a lot of them are just like, I'm here to make money, which is kind of it's a different vibe than when you go to like a token 2049 and everyone's kind of like, I'm in it for the tech, I'm in it for the ideals, and then you get some scammers, and then you get some people that are like, I'm just here to rape and pillage, and there's certainly some of those miners.
It probably is much like a commodity, like gold miners or oil miners, right? Like it's so capital intensive. I know with gold mining, for example, like you get a lot of booms and busts. I mean, oil too.
Yeah. It's not like gold miners believe in gold. So
No, no, they
yeah,
don't. And they go bankrupt all the goddamn time, right? Gold miners
Yeah.
especially.
Bitcoin miners
So
too, man.
yeah. I was reading an interesting thing on like the oil cycle, and it's something because there's like an oil cycle. It's like every 4 years or something like that, and most of the money these companies make is in like one year, like 12 to 18 months, and then that has to tide them over for the next 3 years because the price of oil kind of goes up, and then because the price is high, it causes the economy to slow down and it crashes, and then they lose their ass for like 3 years until the price goes up really high again. So
Yeah, I mean, I think this is kind of where you get a lot of these miners searching for subsidies because yeah, you want to be in a country that's going to subsidize some power or have very cheap hydro or like welcome you as a tech entrepreneur, and then you gobble down on those grants and whatever else they can offer you to kind of, they're just like stimmy checks to kind of say like, hey, this government's for technology. And then they're smart, and they typically have some money and funding, and they'll just kind of move their operations around because mining machines, it's like you can ship them around. China blocks and then unblocks Bitcoin mining, so then they move in and then they move out, and it's a pain in the ass, but they do it.
yeah, you don't want to be like spat on by the locals and vilified, I'm sure, as well.
Yeah, yeah.
We had a news article a couple of weeks ago on Bitcoin.com news about a mining operation. I think it was somewhere in like the Netherlands, somewhere like that.
Mhm.
And the town hated them, hated that they were there, and so they were like, so after whatever amount of time they left, and everybody celebrated, and then the power. The cost of power for the town went up like 23%. And they're like, wait,
Yeah,
what's going on?
dude, Euro poors are gonna stay poor. They're just like
Idiots.
they can't make
Idiots.
it. They're just Europe is Europe is weird.
Unbelievable.
Yeah.
Yay, we got rid of the Bitcoin miners who, weren't polluting. They're probably pretty quiet as well. And then,
Well,
yeah, everyone's price.
there's so much greenwashing, specifically in Europe, where they'll suffer through hot summers. Say like air conditioning's bad. They've all been like indoctrinated. Air conditioning bad. Bitcoin mining bad. Car pollution bad. Yeah, anything that's yeah. There's just a lot of NPC kind of behavior out there. Very strange. Love you, Europe, but what the heck are you guys doing? Figure it out.
I think it's fascinating, the Bitcoin mining industry. I mean, so it's in so many different ways, but one way that I find it really interesting is this concept of you being able to tap into like latent energy sources in order to just like generate electricity. So like kind of like the aluminum industry. Uh, it apparently has long been like in Iceland, where they have a surplus of electricity due to geothermal. Like because aluminum, it just requires a lot of electricity to turn other base metals into aluminum, and so that industry has gravitated to an area where there's a surplus of electricity. And I just find that Bitcoin does that as well, which is, I don't know, it's really interesting. It's a fascinating industry. So
Yeah, I mean, Nic
yeah,
Carter, I would say, also has done some fabulous work on kind of the magical way Bitcoin works with the modern electrical grid, because it really, really does. And you can get into the weeds, into the nerdy weeds of how like any modern electrical grid works, and it's so complicated and crazy that most people don't understand how the intricacies. Even all these, or especially all these um, environmentalists who want solar and all this kind of stuff. They don't really understand what's happening there, and how Bitcoin is net positive for this. Uh,
yeah, smooths out the
so
grid.
yeah,
Yeah,
smooth out the grid, and there's so much like again, he's done a lot of great work. I wish I could cite something particular for people to go read, but I enjoyed reading it, and he really gets into the weeds on it. And it really, you come away thinking like, number one, how impressive a modern electrical grid is. Number two, how stupid these people are who really don't know what they're talking about and then influencing policy. And number three, how Bitcoin fits into this very, very nicely,
Yeah.
solving a problem.
Yeah. It's fascinating. Speaking of Nic Carter, there's a story that I wanted to bring up here as well this week, written by Nic Carter, which is a sort of post-mortem on what actually happened during the bank run last year with Silvergate. So let me just bring this up. It's an article that was published on Pirate Wires. So the story as it was told at the time was that basically Silvergate and what was the other bank? Silicon Valley Bank, I believe. There might be one other bank involved. Basically, they were dumb. That's the story. They didn't have they got their duration. There was a duration mismatch. They were too heavy into bonds that had like low interest bonds, right? And
for like long years, right? Like 10
exactly.
plus years.
Yeah. And then also they were involved with FTX. And so the story as it was told at the time, that's why they collapsed. But actually, it seems like what actually happened here, and I would encourage everyone to read this article, which is really good. It's quite long. It's a 45-minute listen if you're listening to the article. But what actually happened was it was a coordinated effort by the Elizabeth Warren and her goons and a few others to opportunistically take this bank run moment and use it to shut down all the big crypto banks. And that's basically what they did. They told anyone involved, like with not in writing, but over the phone, like, yeah, you can't have crypto on your balance sheet. There's a lot of details in here in this article, but really it's a pretty damning expose, I think, on what actually happened here. And it's Operation Choke Point 2.0.
Harris 2024, Graham.
Yeah.
You guys ever just feel like you're a knucklehead?
This makes me so angry. I remember during this time I listened to some great podcasts and spaces from pretty prominent traditional finance bank people, right? I mean, these guys have never touched crypto. All they do is talk about banks, and they're sitting there on spaces saying like, I don't understand what's going on. These banks are okay. What the hell is wrong with this? Doesn't make any sense. And these people are like, I don't give a shit. They're like, I don't care about crypto. I don't, none of that is interesting to me. But what is going on? And then you fast forward to this right now, and it kind of illuminates a lot of what these traditional finance people were confused about, because it had really nothing to do with the balance sheets of the banks.
Yeah, the bank was actually fine. And
was
so it's all
fine.
political. And I think this tweet here from Austin Campbell, I think, captures the anger, at least, or the slippery slope here. Like he says, if we have decided that you can have your bank account closed for political reasons at any time, the government will use this as a tool to silence all dissent and get around the First Amendment. Today it's crypto, but the problem is the president. And he ats Elon Musk. Already felt this in Brazil. It's infuriating.
Governments are kind of
The thing is ultimately like long term, midterm, short term to midterm, yeah, it's really bad, but ultimately things like this are just going to make the inevitability of crypto happen faster, I think, right? Like, cuz you have to think this kind of stuff will eventually I mean, it'll trickle down, right? Uh, Silicon Valley people are going to see this, and they're going to feel it in their wallet, and so they're going to pay more attention to services and ways to protect their money, right? Which would be like non-custodial or stuff like that, right? I'd have to imagine. But
Yeah.
again, in the short to medium term, it probably won't hurt them. But man,
Yeah.
it's
Eventually, all these straws are going to pile up, and the camel's back will break.
yeah, and then ultimately they'll just lose more power. So
All right, we got 10 minutes left. Any juicy show and tell you'd like to share? I'll bring up Andre's tweet, which captures the zeitgeist.
yeah, I like this. Shout out to Andre, CTO.
Yeah. Yes. The first day of October, Iran launches missile strike on Israel. Port workers strike across the United States. Stock market crash. And then last week was good, but everyone back to work, and it's everyone's favorite McDonald's Wojak with the tattoos
of crypto tattoos.
back to work. Yeah. BitBoy, he's got BitBoy tattooed on his forearm.
That's so awesome.
Ripple. Do you guys remember the guy from I think it was last bull market, where he was like doing on stage? He was like doing on stage panels, and he was this guy. He was like no shirt and had like crypto tattoos all over him, and he was like on panels, and it was just like, oh man, this might be the top.
Where in the cycle was that exactly? Probably near the top.
Yeah, like that should have been one of those top signals of, oh man. I don't know if this guy was trying to be the Wojak or if he just like unironically was the Wojak guy, but yeah.
I can't believe Hydropane Harold was at that conference in Taiwan. I need like a Wojak impersonator to like start doing the conference circuit.
Oh man, yeah. So yeah, I totally felt this as well. Like when price starts to go up like that, and the timeline gets a little euphoric, it takes a little more effort to concentrate on your work and stuff, because you're like, oh shit, I'm pre-rich, I'm about to get it. And then when the price starts to tank, it's so much easier to just be like, you know what, I'm going to be really productive and not look at charts and not look at
I should actually do some work here today.
Yeah, not look at all the red in my portfolio. I'm like,
yeah, when you're scared to open the portfolio tracker.
Yeah, exactly. And your telegrams are not full of euphoric people being like, yo, look at the boom. So
all right, good stuff. Anything else to share before we wrap things up here, gentlemen?
I don't think we did a gut check on the market. Are you guys bullish?
That's right.
What are you guys feeling?
Yeah, I think it's a buy the dip opportunity. And it's more than just a gut check. I think that feeds into the whole liquidity cycle. Bitcoin is a barometer for it. And additionally, this sort of black swan event, which happened like where Bitcoin sold off. And it's when it sells off first and more than everything else. That's your BTFD opportunity.
I just keep going back to what Pedro was inferring, that they're all just trying to get our Bitcoin on sale. They want you to sell. They want you to feel fear. So
yeah, I saw.
Don't let them win.
I saw a couple tweets. I saw a couple tweets about that from reasonably serious people saying, like, if you look in the order books, and I'm not gifted enough to know that voodoo magic, but they were like, yeah, if you look in the order books, it does seem like there's some coordination between some whales who are taking advantage of this very obvious time to sell, to kind of scare people and get them out of their bags. And not just that, but like this past week, I heard a lot of really bullish macro news that has nothing to do with crypto. That's made me even more bullish. So people who are just talking about traditional finance, came out and said some very reassuring things, and I'm like, hell yeah. So I also am bullish. The only issue is when to deploy capital. Like, how far are we going to go down? Like, so I've already bought the dip a little bit, but I still have quite a bit left over to buy further into the dip. But
yeah, I of course stupidly got caught up in the euphoria of last week and put a bunch of chips down on some ridiculous meme coins.
Buy the top. Did you buy the top of the local top of memes?
Yeah, and now I'm like, oh, like should I double down?
Gotta soften that entry point, right?
Oh man. Yeah.
All right. Is that the pod?
Oh, Jesus Christ.
I think we, yeah.
That's the podcast.
Yeah.
Wait, let me ask you one question. This Mudeng thing?
Mudeng, yeah, Mudeng.
Yeah. You guys aware of this? Yeah. What the
What's
hell?
the ticker?
I feel old. It's Moodeng.
There it is, Mudeng.
Is it like Chinese or like Japanese?
It's Taipei. So
Taipei, okay. Taiwanese.
But it's
I think Chinese.
I think it's a Mudeng opportunity here.
Real Chinese.
It's a Mudeng opportunity. I think this thing, man, I must be getting old because I'm always. It sucks that I still get surprised by this, but when this blew up, I was like, "Really? Are you fucking kidding me? This is God." I don't see it.
It's no Bowden. Let's be real.
It's no Bowden, and I think it's just a flash in the pan, personally. So I don't know.
I think people just need to stay entertained during these like shitty moments. Entertainment it has a price, and it's the price of Mudeng.
Yeah. But by the way, Graham, I listened to that podcast that you were talking about last episode.
The meme coin thesis.
Yeah. I really enjoyed it. So we'll see.
Have you guys ever seen some of these news articles about alchemy and gold? How there's a lot of these scientists still trying to work out their alchemical process to create gold. I'm kind of thinking that's where the Bitcoiners need to invest. We need that because if we can invest in the alchemy,
I see.
and then we can devalue gold, then we become better. This could be like a strategic, vampire liquidity attack where we just dilute gold supply by Bitcoin, and then it makes Bitcoin more valuable and scarce. And we've got this, hey, we can't alchemically create more Bitcoin, but your shitty gold, we just invested, a few $100 million into, and we just created a couple tons, diluting the supply.
What about? I've heard there's that, but I think one of the modern versions of this alchemy thing is people investing in startups to go to asteroids that are like apparently 80% gold, and just getting in like 10 times the supply of gold to just like land on Earth.
Yeah, we need like a conglomerate of Bitcoiners and Bitcoin companies to invest in these things, because that will ultimately help our industry out a lot more. If we can annihilate gold and take it out, yeah, we might be okay.
Is Corbin's idea bearish or bullish? Huh?
All right, that is the pod. Thank you, gentlemen, and thank you for anyone who listened to us. Have a great week. Hopefully see you next week. We out.